I mean, I try to tell everyone to be realistic, like, just think about how big is this idea that you're working on? Because if it really was that big, I'm going to be jumping all over it, right? I'm the first line of defense for you. And I try to be as helpful and candid with founders to say, hey, there's something here and it's big enough, but here's why we're not doing it. And perhaps that but is just where we are in our cycle of deployment, or maybe there's a conflict of interest, or maybe we just don't like this category, but there's something still big enough, or it's we like this, but there's just no market that's big enough here for us to get the returns that we need. But hey, you can build a great 10 to 20 million dollar business here, and you could sell this thing for 50 million bucks and it'll be life-changing money for you. And so I try my best when I have conversations, seeing everything I've seen for 18 years in the space, to tell founders, hey, you're completely barking up the wrong tree and there's no business here. And most VCs won't say it to them, but I try to be as candid because I'm just trying to help them. And ultimately, if I can save them 5 years of their life of barking up the wrong tree, I'd like to do that. And then if I still think there really is a business, but it's just a lifestyle business, I try to tell them that too. And I say, don't waste your time with VCs. Stop calling them, raise a little bit of angel money or friends and family money, and go get the profitability as fast as you can. And then there's the, hey, no, there's something massive here. And that's when I'm all over them. I'm trying to get them to take my money, right? And if they don't see that, and if they don't see any VCs trying to get in, that should be signal enough that, hey, it doesn't mean they're working on a bad business. It may just not be the right business for venture capital, because every business isn't for venture capital. Most of the millionaires in America are self-funded, profitable entrepreneurs that collect cash every year from their business for 50 years. And then eventually maybe they exit, or maybe they don't ever exit, but they've collected cash along the way. The thing people don't realize, once you take money from a VC, you can't collect any cash flows. You're building and swinging for the fences for the next 10 years. And if you swing and miss, you're going to walk away with almost nothing at the end of those 10 years. And that's brutal.
Yeah. So I'm wondering, this might be an elementary question, but say you're an entrepreneur, or say you would have gotten venture capital money. What happens then? Like, you bank it and then you're like, I mean, obviously you have a plan going into it. Like, this is where we're going to use some of this money, but like, are there priorities usually that people should think of, or that's all dependent just upon what they're trying to build?
Yeah, I think it's very different. I mean, look, most of the money in venture capital generally goes towards human resource, right? You're hiring development talent, technical talent, product talent, sales talent, and most money just goes towards people. Once in a while, look, there might be a business in the regulatory space where you need the money in order to get a license that's going to cost you millions of dollars. Or if it's hardware, you got to put money towards hardware stuff. So it is very business dependent, but for the most part, startup capital tends to go almost entirely towards people, and then some amount of marketing and sales in order to actually get the product out to market, right? So look, fundamentally, while I don't think that we had $1 billion business at Crossover, I do think had I gotten venture capital money, I probably could have built a $500 million company, a $250 million company, which still would have been good, but it wouldn't have been great for those VCs. So I understand fully, sitting on the other side, why people said no to me. But I do think sometimes there's that middle ground. And so that's where small funds can be beneficial to the market, because if you only have a 25 or $30 million venture fund, now you can sell that business for $200, $300 million and still return your fund off of that deal if you own 10% of it, right? I'm at the point now where we're running a $100 million fund. That means for my 10%, I got to believe that you're going to be able to build a $1 billion business. Otherwise, the economics just don't work. So, it's company dependent, it's fund dependent, it's size dependent, like all of that matters ultimately. So it is very much on a case by case basis, I think, as to where that money goes and how much money needs to go into something to win.
Yep. Yeah. The $1 billion business thing is so crazy. Like, what you say, what you see, 6,000 to 8,000 companies per year. Like, that's what comes across your desk. And just the fact that's what I was just thinking about it before. It's such a crazy thing. And it kind of goes back to you building your own startup. It's like, you're wrong. 85% of the like 85 to 90% of the
90% of the
time,
time we're wrong after we have sifted through and only picked
and done so much
something
due
like
diligence.
0.3% of all companies we look at, we actually invest in, and we're still wrong 90% of the time. That's a terrible business. And yet venture capital is one of the best businesses if you're pretty good at your job.